This is Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 12th of January. There is just about an hour left in the trading day and the trading week as well. So we're going to be starting to print another candle here in about 50 minutes from when I wrap this up. So what do we have here? Again, let's kind of summarize what we've seen over the last week. We had an inverted head and shoulders where we did get that breakout to the upside. It's not quite at the measured move yet, but what's interesting here is it's consolidating. And that could mean one of two things. Either we're going to go range expansion to range contraction to expansion again. So this is actually a good sign that it's consolidating underneath the trend line, because it could, if there is enough volume, this could break this out of here and get a lot of the shorts on the run and attract a lot of attention from longs wishing to jump on board. Now, is there enough volume yet? No, not yet. And that's why it came to a dead stop at this point. So we'll have to see whether or not it has got the energy, has got the volume to be able to do that. Now, speaking of energy, let's throw on the RSI Laguerre with the chop index on here in the yellow. And this kind of explains why it ran out of gas at this point. So it's in exhaustion after the breakout. No surprise. I mean, that's a pretty strong move from about 6,500 up to 8,500. So it's a 2,000 point move. We get so used to these big moves when it comes to Bitcoin. We sometimes forget that, wow, that's an enormous move on a percentage basis. Even today, we're up almost 2% today, which would be a monstrous move in the equity markets, but hardly, brings up the time of day when it comes to crypto. So what we're seeing here is that this is going to take a little bit longer to consolidate before this thing can break out. If we count this back, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we have to drop these days off, get rid of this big candle here, and maybe even get rid of this one before it's going to have enough gas. So more than likely, just estimating, it's going to be at least 3 to 4 days before it's going to have enough energy to be able to make another attempt at that. And that's probably more than likely going to line up with some kind of other exogenous event. And as we've seen lately, a lot of this breakout to the upside really kind of married the equity markets being weak and being a little bit of a, fear shock due to the tensions with Iran, and Bitcoin was viewed as a safe harbor during that. It's not always, but in this case, it was viewed as a safe harbor status. So we'll see. I mean, right now, the equity markets are just beyond stretched right now. The S&P 500 has monthly chart in exhaustion. It has the weekly chart in super exhaustion down into the low 20s. And the daily chart is actually highly charged, meaning that it's the equivalent of a family vacation. The parents have been driving all day. They're just about falling asleep at the wheel. Meanwhile, youngster in the back seat has been sleeping all day, wakes up at 8 o'clock at night, and is ready to go. It's a combustible combination. Somebody's going to lose in that case. Usually the parents win in that situation. So, and when it comes to the S&P, this is what I might be looking for, is a very sharp pullback in the near-term future, which is really against the trend. The trend has been massive for the last 14 weeks, kind of crazy. But when it gets overcooked like that, we can see very quick pullbacks. And I think Bitcoin would probably be a beneficiary of that and might help it break above and beyond this impressive channel that it's been in for a long, long time, really since last summer. So lately I've been seeing a lot of people chirping out there. This little rally, we got to 6,500, peered over the cliff, and then came back from it. So the bigger picture to me, and I have to keep bringing this up because so quickly we forget about it, is that this is just a monthly symmetrical triangle, essentially what this is. And we don't know whether or not it has to go down and toy around with these support levels or not. Markets will do whatever causes the greatest amount of pain to the largest number of participants. So if we end up going down, that means that too many people are leaning way too long and the pain is to the downside. That could be possible. Right now, what we're seeing over the last couple of days is the pain is to the upside. However, the volume just isn't there, guys. So this is, from a larger time frame perspective, this is still in play here. And what I've been saying over the last few weeks is I don't know whether we have to go down and retest these levels or not. I don't even know if we have to go down and retest this level down here at about 1200. Heaven forbid we have to do that. But if we did do that, more than likely we'd have that capitulation event, which can drive prices much, much higher in a very, very violent form, as we have seen in the past, if you need reminding. I think this is going to be a wild year. I think a lot of people are just looking forward at the election in the United States and all the other events around the world right now and thinking that, well, everything is okay and we can sort of look forward to election results. I think that things will happen. I've been through this so many times before that just when it looks like everything is all set, everything is, certainty is across the board, all of a sudden we get that surprise that comes along and kind of rocks the world. If you need reminding, we had exactly one of those back in 2008. We've also seen things like this happen in 1992, where one political party figured they just coast right into the White House again in an incumbent status, and surprise, it doesn't always work that way. And markets will react to things like that. They will react to uncertainty. And I believe that 2020, yes, is going to be a year of uncertainty. Right now, everything seems to be stable, but I think the events of the last week are just a taste of what we have coming for us. And I think actually, since Bitcoin has been through all this toil and trouble lately, it may end up coming out as a perceived hedge for this. There's been a lot of talk about that lately. I'm not going to get bought into the religion of it. I'm going to let the chart action pretty much dictate how I feel about this. Okay, so back to BTC on the daily chart. Watch for a couple more days of consolidation. That would be the expected route. And then from there, once we build up the energy for this, there should be almost a binary response. Either we're going to break out or we're going to break down again, one way or the other. So my guidance towards you is come up with a plan to say, okay, if it breaks higher, this is what I'm going to do. This is the decision point that I will make to either add to my position or go long or do something like that from the long side. Conversely, make sure that you have a plan to do something to the downside. So whether or not it's to take profits off of a swing or set up some kind of option play that will make profits if the price comes down, or even set up a straddle in the near term. I think there's a couple of days left before we'll get that movement. And since I'm talking about straddle here, let's look over at the implied volatility through our SKU tool. And what I'm seeing is, oops, I had it there. Don't know if you can see this all that well, but the implied volatility has definitely come in over the last few days. So that's good. I was seeing this come up here, and I think that had to do everything with geopolitical events that we had happening here into the beginning of the year. And since that point, we sort of tailed off, although it's still somewhat elevated. It is still somewhat elevated, but something like a straddle, what you want to do is you want to be buying implied volatility when it's low on a relative basis. Relative to what? Well, certainly not at the recent highs. You don't want to be doing that. But pretty soon might be a good play for that straddle one way or the other. All right, just finishing up today's report. I logged into Deribit today, and they've got a little bit more detail in terms of what they're going to be doing and with KYC. So there's the announcement lately that they're going to Panama from Holland, and what they're going to be looking for from existing customers as well too is what's your email, what's your name, date of birth, address, details, country of residence. So I don't know if you can just type something in there and say, oh yeah, I'm from part of the EU, and not have to back it with anything. Like Binance, if you guys have ever opened up a Binance or Bittrex account, you're doing this sort of, dance trying to hold your phone and take a selfie at the same time that you're holding up your passport and your driver's license and all this other stuff. I don't know if that's going to be required for this or whether you can just put something down. But to me, this is a clear sign that, okay, we were sort of kidding about not wanting U.S. citizens on board this, and now we're real serious about it. So I'm going to keep my account as long as they won't boot me out. But obviously, I'm not going to be able to pass these things. And so a lot of the tools that we've been using for options, and that includes the position builder, which is kind of nice, but that's really not part of the account. So we'll kind of keep that one around in our back pocket until they put it into the platform. But this is going to make things interesting when it comes to crypto options. Now, tomorrow is supposedly the 13th is the day that the CME is going to offer options on its futures. Again, the issue here is that here's the CME, and the CME is an exchange. And this is what's different from crypto. So CME is an exchange, and only if you're an institution can get direct access to that, where you can lease a seat at the CME, or, basically you buy a membership to become part of the institution. If you're not, if you're just a retail trader, then what the CME will do is they will open up their product set to brokers. So this can be any types of these, online brokers that are out there, OB, online brokers, right? So this can be TD Ameritrade, this could be interactive brokers, it could be anybody around the world that wants to connect with the CME and offer their products. Well, this is how the retail trader has to get into these. So just because the CME is going to offer options on futures starting tomorrow doesn't mean that you or I can get to it unless we can get to it through our broker. So tomorrow I'll be checking with TD Ameritrade and other brokers like that I have to see if they're going to offer them. If they're not offering them, then I will ask and see if they plan to do so. This is all part of the growing up process of crypto. So we're early to the game when it comes to derivatives like options and futures. These will only get broader, more liquid as the whole, industry grows up through cryptocurrency trading. All right, folks, that is it for Doc, and I will see you guys in tomorrow evening's report. Thanks for listening.